This is the Business Lens, where we go beyond the headlines and make sense of the numbers shaping your money, your business, or Nigeria's economy. Good morning. My name is Divine Alex. Stay with me. Let's connect the headlines to your business, your money, and the economy. Now, what if I told you Nigeria's exports to China jumped 80% to $2.3 billion in just 6 months? Now, that's a number that is worth smiling about. China's expanded zero tariff access for African products is helping Nigerian commodities find a bigger market. But here's the catch. Nigeria is still running a trade deficit with China. So yes, we are selling more, but are we selling enough? And more importantly, are we selling the right things? And that question of what Nigeria earns versus what Nigeria owes takes us neatly to the other side of the balance sheet. Now imagine opening your financial statement and seeing $51.9 billion in external debt. That's where Nigeria stood at the end of March 2026, which is up 12.9% from $45.98 billion a year earlier. Now, here's where it gets interesting. The top 10 creditor exposures account for 97.2% of the debt, with the World Bank and Eurobond investors alone accounting for more than 70%. So the question isn't just how much do we owe, it's who do we owe, on what terms, and what did the borrowing actually finance? And where are the proof? We really need to find the answers to all of those questions. Now, and while Nigeria is dealing with its own debt obligations, there's a much bigger debt story unfolding across the global economy. Now imagine another $13.7 trillion worth of goods changing hands around the world in just 6 months. We have the UNCTAD saying global goods trade jumped 12.5% year on year in H1 2026. But here's the bit I want you to think about. Some of that increase is being driven by higher prices. While trade in critical minerals jumped 38%, we have semiconductors at 25%, batteries 15%, and electric vehicles at 11%. So global trade isn't just getting bigger. The things the world wants to buy are changing. And that brings us back home. Where exactly does Nigeria fit into this new global supply chain? Well, while we are talking about money moving around the world, let's come back home to where investors are putting their naira. Now, this one is a little counterintuitive. Investors came to Wednesday's Treasury bill auction with 4.4 trillion naira in bids for just 700 billion naira on offer. The one-year bill alone attracted 4.19 trillion naira against a 500 billion naira offer. That's more than 8 times the amount that is available. Now, you'd normally think, well, everybody wants it, so perhaps the government can borrow more cheaply, but that's not the case, not this time. The CBN actually raised the 364-day stop rate to 17.59% from 17.35%. So why would the cost of borrowing rise when demand is so strong? And that question of borrowing cost brings us straight into the bigger question of where banks are actually putting their money. Now, this is a shift. This is a shift that you might not immediately notice in the numbers. Credit to agriculture climbed from 3.71 trillion naira in January to 3.86 trillion naira in March, roughly 150 billion naira. This is in more than just 3 months. And at the same time, lending to oil and gas fell by 335 billion naira. So are Nigerian banks beginning to reallocate capital towards productive sectors? Or is this simply a response to changing risks and returns? Because if we're serious about reducing our dependence on oil, then the question isn't just who gets credit, it's what that credit produces. And now, speaking of what Nigerians are producing, there's another sector where the taxman is about to meet a very different kind of asset. This is taking us to the next one. So if you thought that crypto was complicated before, Wait, hold up. Wait until the taxman enters the charts. So the Nigeria Revenue Service, NRS, released its first comprehensive virtual asset tax guidelines on I think it was July 31st, and we also shared it here, covering cryptocurrencies, stablecoins, NFTs, and other digital assets. But today, PwC says there are still practical and legal ambiguities around implementation, and depending on the transaction, taxpayers could potentially face income tax, withholding tax, VAT, or stamp duty implications. So the big question for crypto traders and digital businesses isn't simply, will crypto be taxed? I think we've moved past that. Right now, we are now at a phase where we would say, how exactly will the taxman determine what you owe? And from digital money, let's move to a completely different kind of financial risks, the money that regulators don't want moving through Nigeria's capital markets at all. This is taking us to SEC. Now, this one is for the brokers, fund managers, and everybody moving money through Nigeria's capital markets. The SEC has ordered regulated capital market entities to terminate correspondent banking relationships and restrict business dealings involving North Korea and Iran following the FATF risk assessment. Now, this directive takes immediate effect. So this isn't about stopping ordinary investment activity. No, it's rather about knowing where money comes from, where it is going, and who is ultimately behind those transactions. And while regulators are tightening the rules around financial flows, there's another financial story where the problem is almost the opposite. Nigerians are beginning, to see the opposite. They're opening accounts, but not actually putting money into them. This is taking us straight into the pension story. Now, this number should make us pause a little bit. Nigeria has 219,316 personal pension plan accounts, but we have only 18,811 that are actually receiving contributions. You see, the numbers are not quite anywhere close to each other. Now, that's a funding ratio of just 8.5%, meaning more than 9 out of every 10 accounts are effectively inactive. And now Pencom is saying it may now miss its 30% funded account target for Q4 2026. So perhaps the real pension question isn't how many Nigerians have pension accounts, it's rather how many Nigerians are actually saving. How many Nigerians are actually considering putting their money into savings? And from the long-term investor, let's go to the short-term investor, because the NGX is about to change the rules of the game. There's a lot of, changes happening around the NGX. I think I said it on the last episode that there's a lot happening on the NGX platform. But today, being Monday, August 17, was not supposed to be just another trading day on the NGX. There's a new rule coming into play. However, the new pricing methodology that was initially scheduled for today has been postponed, with NGX saying that a new implementation date will be communicated. The rule would have changed the minimum trading volume required to trigger price movements. And well, this new exchange, I'll explain it, is to introduce a revised pricing methodology with minimum trading volume thresholds determining when transactions can trigger published price movement. Now, let me explain this in a much simpler term. For example, we have stocks that are priced at 1,000 naira and above will require 10,000 units, while stocks that are below 500 naira will now require 100,000 units. Interesting, right? I think this is really interesting because it has a lot of questions hovering around it, while a lot of people are in the I part of it saying this is really a good cause. And today it's on pause, and that pause gives us a big question. As NGS targets 230 trillion naira in market value, what will it take to get there? And can major fintech listings help drive that growth? Because we have the situation with fintechs, listing on the NGX. And this is where I want us to keep our eyes peeled today. The revised pricing methodology kicks in Monday, August 17, today. At the same time, investors are already navigating a market that has been under pressure. At the same time, we also have the NGX that is looking at growth with both fintech listings and the 230 trillion naira projection. Now, we will have to discuss this after the break. My name is Divine Alex. Stay with us. You are welcome back. This is the Business Lens on Rapid Television. My name is Divine Alex. Now, we gave you the headlines, and I talked about the fact that NGS has a lot going on right now and would definitely look into it. Now, the NGS was supposed to change the way some stock prices move from today, and then just before we got here, the exchange hit the pause button. The revised pricing methodology, which was scheduled to take effect today, August 17th, has now been postponed, like I said earlier. But interestingly, that doesn't change the bigger conversation I want us to have today at all. Because while we're talking about how prices are formed, NGS Group CEO Temi Popula is thinking much bigger about how the entire market grows. And he has projected that the value of companies listed on the NGS could rise from roughly 160 trillion naira to 230 trillion naira by the end of 2026. And that's about 70 trillion naira more market value. And one of the opportunities he sees is sitting right in front of us. Nigeria's booming fintech industry. Popular Temi has called for policies that would encourage major fintechs such as OPay, MoneyPoint, PalmPay, Flutterwave, and all that. And considering foreign listing, to consider foreign listings to also list in Nigeria, potentially through dual listings, so that Nigerian investors can participate in the wealth being created right here in our country. So the price rule may have taken a rain check, but our NGS conversation is still very much on, like I said. Today we're looking beyond the trading screen. Can the NGS get to 230 trillion naira? Can fintech listings help get it there? And perhaps most importantly, can the average Nigerian move from simply using these businesses to actually owning a piece of them? And I have with me Dikaja, who is a senior financial analyst with Nairametrics. Good morning. He's joining us on call. Are you here? Good morning.
Yeah, good morning. Can you hear me?
Yes, I can hear you.
Yeah.
Now, let's start this conversation by starting with the elephant in the room. Now, because of the pricing that was supposed to take effect today, but somehow we had the situation where this was, put on a pause. What does this tell you about the exchange? What the exchange is thinking at this moment?
Yeah, thank you very much, Define. I think it's not as if that the reform has been abandoned. I think NGS really wants to maybe consult more, talk to other stakeholders within the ecosystem. Because it wouldn't make sense just implementing when we've not actually discussed with the other stakeholders. So I think that is what they're thinking. And this thing has to do with price discovery and making the market more efficient. I think that's the reason why maybe the share books, it has not been abandoned, no doubt. So maybe they'll come back to it.
Welcome back. This is still the Business Lens on Rapid Television, and we had Idikaja on the call, but we were having a little bit of a technical glitch trying to hear what he was saying. But now we are back, and we are back stronger. Now, the conversation, like I said, is around the NGX and the new things that is happening, and we wanted to see how this new price methodology is going to affect the retail investors. Mr. Deka, can you hear me clearly now?
Yeah, I can hear you clearly.
Okay. Now, I've taken a little bit of your comment on that first one, and maybe I'm going to have to leave that conversation to when they finally communicate when the pricing methodology is going to start taking effect. Now, let's zoom out and head over to what the group CEO said about the projection of the market capitalization to grow as much as to go, I think, about 70 trillion naira, which is going to take us to 230 trillion naira by the end of 2026. How do you see this? Is this something that is achievable?
Yes, it is achievable. Even looking at the trend, 70 trillion I think last time at May we were about 160 trillion, and it have dropped a bit to 156. So give and take what we are now, we need maybe about 70 trillion to make it to get to that stage. Of course, that will looking at uh, um, domestic participation right now. I think it is possible. Yes, we are likely to meet that projection, but that shouldn't be the main thing there. I think the major thing there is how freely um, investor can participate, especially the retail investors, and that will take us to the free float. Well, it wouldn't make sense that you have almost 230 trillion market cap, and investor cannot freely trade and cannot go in and come out. I think that is the intent for me there.
Okay, now how much do you think could come from share price appreciation if we're looking at the target of 230 trillion naira by the end of 2026? And how much needs to come from new listings and fresh capitals? Do you think this is going to work hand in hand with the projection or the new conversation? We are still even going to talk about it, about the fintech listing on the NGX.
Divine. The issue is that when you look at when you talk about market capitalization, I think you have two variables there: the share price and the share price and the shares are standing. So if the share price increases by 20%, of course, the market cap will increase by 20%. So it's just a matter of those stocks filling up, rallying, and if they rally, yes, up to 20%, we get up to 20% increase. So that's from that angle. Then you probably look at new listing. When you have new listing, definitely it will improve it. Of course, we know very soon now. We're expecting Dangote refinery to come up on board. I think NGS has announced that. So with that, though, secondly, the president announced that he's doing everything to have the NMPC to be listed, but I don't want to rely on that. So if I take only Dangote refinery when it comes on, but I think yes, we're likely to get that no listing and at the same time existing shares and filling up. I think from this year, I think the stock market has gained over 57 trillion. So that just gives you an idea, over 57 trillion from January to this point. So that gives you an idea of what is likely to happen if we continue to have a strong rally on NGX.
Okay, now we have the group CEO, calling for policies that would encourage major Nigerian fintechs such as OPay and the rest of them to list locally or consider dual listings. If some of Nigeria's biggest fintechs came to the NGX, how materially could that change the size and character of our capital markets?
Yes, it will impact, but I think I will look at it from this angle. If they come in, how will it affect one the age of investors? Looking at the fintech, it's always good that when you want to own, I think something you use every day. What we are in tune with, we know we have the cement. The stock market now is being carried by the SMEC sector, the banking sector, the consumer goods that are not so that too into to the younger people. So with fintech coming in, if they eventually list, I think it's not only what is going to add to the NGS, it's going to act spread the participation where the young people will definitely, because that's what they know better, and they will come in. That's the angle I would like to look at it. Of course, Open now is trying to float an IPO and with tentative valuation of about $4 billion. That is much. And if eventually, though that is not the actual IPO valuation, so but if eventually the list in Nigeria, that will be okay. That will probably push the stock market up.
Oh, okay. Now, what sectors or businesses do you think can actually benefit directly or indirectly from this new development that we are seeing on the NGX as of today? And then when we look at this too, what about people who also invest relatively small amounts, say 20,000, 50,000 naira? Where do they come in?
Uh, yeah, if you look at the NGX data, the domestic market is still controlling about 91% of transaction as at May, and based on um, that number, although the institutional investor is still higher, but the retail investors are equally doing very well. And coming in there, how they will benefit, I think, depending on the price, coming in the
Okay.
price. If the
Okay.
price is okay, this never, let me not say this. If the price is okay, because you have some stocks like other surplus trading over 11,000,
Okay.
other trading over at a very high price. That automatically will remove the downside, that is the retail investors. But if they come in at a lower price, that will not give them the opportunity to equally participate and invest and come in easily.
Now, could successful fintech IPOs, create a pipeline where today's startups see the NGX as tomorrow's exit and expansion market? And could these listings, if it happens, help move Nigerians from being consumers to shareholders? Oh, would ownership still be some type of conversation that we'll still have in the future?
Well, yes, of course, if you list normally, if you buy equity, automatically become a shareholder. Sure, that is one thing. That's a characteristic of one of the characteristics of the stock markets. Of course, you become a shareholder, and that is very, very important. That is very, very good. That gives you that sense of belonging. That okay, I've subscribed, I've bought the shares of any of the fintech, and that will give you that ownership psychology. That okay, I'm now a shareholder. Of course, the thing you use every day, like Opay, Pampe, Money Points, which we use daily. Of course, we use their list and buy and you become an owner, a shareholder. That is very, very important. That is psychological. That is okay. But the most important thing that yes, it's not as if is going to just drive the entire equity market, but it will help. It will help to an extent. But of course, we already have the the bigger companies that is normally what we call the SWOT stock, what over 1 trillion in market cap. They are there. So it depends on their valuation at a point at what level they are coming in. But I think it will give the investors, the users, the consumers that sense of belonging, that psychology that okay, they are now part and parcel of the fintech company that are being listed.
Okay, so now what needs to happen to make this work? If the ambition is a 230 trillion naira NGX and we want Nigeria's biggest private businesses, especially fintechs, to help drive that growth, what does the ecosystem need to fix first?
Yeah, I think the most important thing is synergy
Okay.
between the regulators. So if fintech is listing the regulatory hurdle from CBN, after maybe going through the regulatory hurdle from CBN, then SEC will now come with their own. I think there should be a synergy within the ecosystem so that we have more efficient and straightforward listing. I think that is the key point. It has to be worked in a way that the regulators should be able to coordinate, and even any listing should come in seamlessly and but efficiently. That is very, very important. That
Okay,
is
so
very, very important.
very, very
So
important.
and equally, of course, we know the tax systems and in fact, all the regulators, all the agencies should be streamlined in such a way that listing should be easier and, of course, at the same time efficient.
Okay, now I wanted to ask you, because you already talked about regulators, what role would you say, or do you think that the CBN has to play alongside SEC to ensure that, we get the market exactly where we want it to be?
Of course, the CBN will, the role they should play is to find out, okay, is this particular fintech capable enough to come on board? Is it strong enough? Looking at, because actually CBN regulates the fintech. So is it strong enough to list? Of course, from SEC will now find out what is the, are they able to meet the SEC requirements in terms of listing? Is it in line? Of course, now you look at NGS, what are you bringing on board? Is it strong enough? The listing requirements are they being met? Do you have the structures in place, the app and everything that has to do with trading? Now, of course, we are we are into T+1 transaction scheme, whereby you list, once you trade, of course, you get your transaction after trading within a day, and that is very, very important. And that this T1 plus is a major reason why the FTS kept admitting Nigeria back to the frontier market pending, because they said that it will not favor their clients. So these are the things that the ecosystem has to really work very well to ensure that even when we are coming in, we'll be able to know that, okay, we have met all the requirements, you have the necessary facilities, both cyber security and everything is in place to enable you to operate efficiently and seamlessly. So that is
Okay.
what I think.
Okay. Do you have anything that you want to add? And especially if you were to advise the NGX today, what is the one thing that you would change to make Nigeria's capital market the obvious home for the next generation of Nigerian businesses?
One, I think where we normally have issues, we look at the brokers
Okay.
in terms of customer service. It is very, very important too that NGS already, I know we have investor protection schemes here and there, at least to protect investors. I think the key thing is to protect investors. And that's where equally the brokers will come in. Customer service means a lot. So I think I will focus more on customer service, coming from the broker, not only from the broker, the issue of maybe CSCS, Central Security Clearing System. Of course, when you do your transaction in case of any, maybe you want to do global search and so on, then it will come out easily. Then, of course, the transaction, being able to book your transaction seamlessly and have it fast and possible. So these are the things I think that all the regulators should work together. SEC has been doing very well,
Okay.
but in terms of the execution, we can do more, can do more,
Can do
can
more.
do more.
Okay, thank you so much, Dikaja, for that. Unfortunately, we cannot continue having this conversation, but we'll have a 2.0 on the NGS conversation. Now, before we go, let's look at the business word of the day. Now, we have domestic capital formation. Domestic capital formation is the process of mobilizing savings and investment within a country and directing that money into businesses and productive economic activity. Now, let me explain this. Domestic capital formation simply means getting Nigerian money to work for Nigerian businesses. So instead of our biggest companies depending entirely on foreign investors on foreign markets for capital, Nigerians can invest their savings into these businesses and potentially share in the wealth those businesses create. Now, let me connect it to today's conversation. Because if you look at the whole conversation that we've had, you see that the real big question behind this, getting the fintechs onto the NGS, can we turn Nigerians from just customers of these companies into owners? That question is exactly, the perfect explanation of what domestic capital formation is about. And perhaps that's the most important part of today's conversation. Thank you so much, Idikaja, for being part of today's conversation.
Thank you for having me, Levine.
All right, thank you. And to you too, thank you so much for being on the other end of the television and watching us. This is still the Business Lens. This has been the Business Lens on Rapid Television Abuja. My name is Divine Alex. Bye for now.